Welcome to Trading Lounge and the European indices for the 4th of September. So from this low here on the hourly chart, we had this as wave 4 here, and we're counting 5 waves to the upside. It's possible to count 5 waves to the upside in terms of 1 and 2 and 1 and 2 and 3 and 4 here, overlap here, not good. 5 and 3 and 4 and 5 here. So it's possible that we've got it in, but it's also possible that the market can continue to the upside as well. If we took this as a from 0 to 5 here as 5 waves, then an A and a B and a C wave back to the 61.8% mark. If the market found this area here as the resistance, then we would look at this being as a top in place. Okay, and we'll have a look at what that means in the bigger picture in a minute. However, on the long side, if the market continues to want to move higher, then we need to find a way in. Currently, this move down through here is in 5 waves, so we should see a rally from around here. Yes, this may not be finished here, but we should see some sort of corrective rally. The 61.8% is up here. It doesn't have to reach that far, but we do want to see a clear corrective rally in that space there. Now, once that gets into place, and if the market moves back down through this way, then we can use that second high here as the entry point. But only once this is pulled back from that point can we use that. And we may be able to bring it down further over here as well for this and get a better entry as well. Now, you could say, well, why don't we just buy down here? Yes, you can do that. You'll need to know what you're doing. So you'll need to understand that there's actually 5 waves in this structure. And at the end of the 5 waves here, you can, and there'll be 5 in the last one as well. So you could buy at this point here. The other way that you can do it is to help confirm things is look for the first 5 waves to the upside, which will probably be, if the market was going to move up, then it would hit the 13,000 and then back. Here's an ABC pattern. Because you got 5 here, then you can be assured after a correction you're going to get the next 5 up through this way. So waiting for those 5 and waiting for those pullback is a safer trade. In a nutshell, out of all of this here, later on what you just need to be looking for is the 13,000 as a nice tested support. Now, if it doesn't do that and it becomes weaker and moves down further, then this 5 waves from wave 4 here, copying this and taking it up here as wave 5, and we don't know if that's confirmed yet either, because this is a fractal and it can just continue to fractal out up through here, so we certainly need to be mindful of that. But just coming out into the bigger picture here, so we can count it up like that. Well, actually that spike is part of that, so that can go in here. It's a pretty dodgy count, but it works, you know. So that brings us into wave 3 here and 4 here and 5 here. So in the bigger picture on the daily chart here, we can count this up for 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here for the 3rd wave and 4th wave, and then we're looking for 5 waves up into this structure here. Now, I know that this can be counted differently, and different people have got different counts, and that's all fine, and I've got other counts as well, but this is one count that fits this particular high point here for that. So we just really need to be mindful of this. So it is possible for this to have an ABC correction here. Yeah, I mean, there's stocks around the world that have got these 5 waves in place as well. So the DAX is not a lonely product in the basket of CFDs or indices. So this can correct from here. So in that case, let's just go back to our 1 hour chart now that we sort of understand the potential, how far this can actually move down. We need to see the 30,000 as a retested resistance here. What I can say is the 61.8%, if you can't understand what the resistance is at the 13,000 when you see it, then know that this level here, the 61.8% mark, once that becomes the retested resistance, then the market can move lower from that point. If this was down for 1 here and back for 2 here, then this move here would be move this down as wave 3 here, wave 4 here, and wave 5 coming down through here. So it's possible as 1 and 2 and 3 and 4 and 5 here. Once it does that, then it will also want to, if it follows this path, then it can also retest back up here, the 61.8% again. But this is the side over here. So if we do get that 5 waves down here, don't feel too miffed about things if you miss things and mess things up, because we'll definitely be catching it over here for that, if there's a bigger bearish picture going to unfold. So we're not going to miss it. So for the upside here, we need to see a classic trading levels pattern sitting on this level, and then we can go long from that point. And just be mindful that on this first rally here, that you just don't want to get caught in that point just there. So let's move on to the FTSE. So with the FTSE here, this can be counted like this, as 1 and 2 and 3 and 4 and 5 for this point. Now, it's a pretty messy trend in here, and I have to say that it could probably easily be counted as a corrective move to the upside as well. But I'm just pulling it in line with the rest of the world. So we'll, as a top in place. The rest of the world had these, had different tops over, at different points, had different tops in them. But this looks kind of bearish here. So we are currently triggered in short through here. Now, once again, this is a bit of a messy count as well, but if it's a 1 and 2 here, and it could also be an A wave here and a B wave here, and in fact, I think I should put that in for that as well, just to remind me. So this count here is an A and a B and a C wave for the A wave here, an A and a B and a C for the B wave, and then we can look for 5 waves here. The 61.8% here is basically at 5,500. So it's certainly trending in that direction. We've only maintained to be bullish while the 6,000 is the support, but once it had become the retested resistance, and here it popped through here and came back up and tested it, but it didn't make that new low below the reference point low here, where over here it's done that twice in here. So that's why we're short in there. So let's just cruise in for this, see what I've updated here. Okay, so yeah, this move up here can be counted as an A wave and a B wave and a C wave up here. And if that's correct, then we can make new lows below here for this. Because it's kind of interesting, if I just go back to go to the monthly chart here, I just want to talk about this for a moment. I mean, this economy's, this is the tech bubble 2000 here with an A and a B and a C here for this. Back down into the 2008 area through here, and then it's had its 5 waves up, 1 and 2 and 3 and 4 and 5 here. So from this wave 4 to this wave 5 here, which makes a bigger wave 5, we can have some serious top in here, and we've always looked at that. But I've always tried to remain sort of positive as well, because of what was happening with the US markets. This move down through here can be counted as, if I looked at all of these 5 waves up here as wave 1 then, and then an A and a B and a C for wave 2. So that's possible as long as that low stays in place. And currently we're looking up at this as wave 1, so come up and hit the medium level there, and we're looking back for a little wave 2 here, and then we need to see it move up further. But if it drifts down too far down here, then we're going to have to look at this whole leg here as being the bearish leg. At minimum, it can come down to the wave 4s of 1 lesser degree, which is down here. So that's sort of how bearish it can be. Just coming back to the 4-hour charts here, and I might just go to, let me just check on this. I know this will be all right. So here we've got clear A, B, and C here, so that can be the B wave here. Here we've got 1 and 2 and 3 and 4 and 5 down here for wave 1 and 2. Now I could count this here. I need to spend some time. I could count this as wave 3 here, and this is wave 4 here, but it has overlapped wave 1 at that point. So it may not be the case, but what it does present is it presents this as the 5th leg here, and then that would be the final leg there at that point. Do you know what I mean? That can be the low of that. But because of that overlap here, and I've seen this overlap before when you're working around large numbers, because the market's using that large number to test on, and that can occur. So this is possible, a real possible count that we've actually got a low in here, even though we're looking further down from here. So I just want to watch this a little bit further. I think that we've got further to go down. I think that this C wave at minimum will be down here somewhere, and this will be down here, and this could be down here, and we'll use this here as, this is the correct way to count it, as 5 waves down here as wave 1 and 2 here, and then looking for the 3rd wave to come into play here. So we'll just see, but we've got that situation where it is possible for this wave 5 low to be in place. Not that one. So it's possible that can go in there. So we need to monitor this here. Basically, we were on this 6,000. We were looking to go short below here, and if we had a classic trading levels pattern above here, we would look to go long at that point. So we're being triggered in short. And the thing next here is that instead of bringing the stop down, because we need to be a little bit mindful, if you take it, let's sort of 60-70% off the table here, then we can expect a corrective rally off this low. Which brings us back up to here. And then you might say, well, why don't I just get out all down here? And yes, that's correct as well, but it may not come all that way up here. It may only come to the 40%, which is if that's 60, 50 and 40 back to here. And then you'll say, oh, maybe I should have stayed in and just sold again on the rally. So these are things that we need to work out because of the other mark. This move down through here is in 5 ways. But when you think about it on the DAX, which was the top of the market, and the S&P 500 that was the top of the market, then those markets we can expect them to have down for an A wave, a B wave, and a C wave down. So it may help this 3rd wave down here in all of this. That's why I'm saying we'll take a balanced view. And just for a moment too, if this market rallies, so it just rallies off, let's say it rallies off this low here, or even if it comes down a bit further and then has a good rally back up here, that low becomes the reference point low again. And then you'll see the retest here. You can sometimes see the retest if you've got good volume. You can read the volume. Then the rally here should be on lower volume than the previous move down. And if you see it on lower volume, then you know that it's a correction, and then you can short it much closer to this point, the actual price point there. Secondary, you can look at this in terms of an ABC pattern, and you can get a finer as an ABC pattern. Then you can use that low there to go short on. Okay, or build in 2 positions. That's probably what I would do. Rightio. So that's it. So we're not bullish unless the 6,000 becomes the support. Okay, we'll just stay on the short side. Alrighty, thanks for tuning in. Cheers.